Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckholt dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of The Lumber Word. We're recording this on the 24th on a Wednesday. We're really excited. We have a great guest this week, Dustin Jalbert. He's a senior economist at Fastmarkets, senior wood products economist. Had a good time with Dustin, meeting him up in Montreal. Also wanted to say he is a University of Maine graduate. And I looked up, you guys are the Black Bears, right?
We are the Black Bears. That is our mascot. So we, probably best known for college hockey on that front, although the last few years, last decade hasn't been great, but this year they had a pretty good run.
Just for all you Black Bears fans, they are playing Merrimack College in baseball at 3 p.m. today. So make sure everybody tunes in if you get a chance to do that. Greg, welcome. Dustin and I really had a good chat before we even started this thing. So we have a lot of stuff to unpack. I think there's a lot of uncertainty in the market and confusion right now, which will lead for a great podcast, and everybody listening will enjoy it. At the end of this podcast, we're going to talk a little bit more of the market update and our Merry Date Dump segment. So as Greg said, tell people they should listen to everything through this podcast because there'll be some really good stuff at the end. Yesterday, new home sales came out. We'll start unpacking a few things at a time. And from what I can see, the new home sales still look rather solid. Anybody have any input what they thought about the new home sales coming out yesterday?
Dustin, I'll let you tee it up since you're the economist.
All right, sounds good. I mean, just looking at the numbers, I agree, Ash. I mean, we touched almost close to 700,000 in sales on a seasonally adjusted basis. I mean, pretty good trend. Certainly, we're kind of hanging at the pre-pandemic trend level, call it 2018, 2019 levels, but kind of look at the 3-month moving average, we're moving up. If I had to guess, the next few months, we'll probably see that cool a bit just because, rates have really spiked up, call it, 40, 50 basis points on mortgage rates. I think, up and to the right, seems like where we're going to be moving for the next 6 to 12 months, probably volatile with the rate environment.
No doubt. You and I kicked around some great ideas and how we were looking at a few stats that came out this week, how most people projecting rates over the last 3 years have been way off. And we're probably...
Except here at the Lumber Word. I mean, I think, our rate forecast has been spot on.
That's true. We were saying rates were not going to go down for the last probably 6 to 8 months. And I think people are kind of settling into that possibly being the fact. The other interesting thing I saw yesterday on new home sales, it seems to me one of the largest percentage, the builders are still doing buy downs, are still using their mortgage companies to facilitate rates. I heard a stat somewhere around 80% of a lot of these new home sales are going through the mortgage companies that are owned by these home builders, which
it's just another way to reduce the price. I mean, which is a positive, absolutely. Right? I mean, you
can do that on a private sale, can you not?
Absolutely. I mean,
you can just negotiate with the
whatever they want,
mortgage company, and buy the points down. Correct? It just costs money.
Yeah,
it's no different than just dropping your asking price in the house.
Exactly.
You just take $20,000, apply it to the points, and say, okay, we got a deal, right?
Yeah, it's basically the builders are paying for the points, right? And they have big, high enough gross margins that even with paying that down, if it's they're paying down to a 5.5% or 6% for a couple of years in the life of the mortgage before it kind of ramps up to whatever the prevailing rate is or whatever the qualifying rate is for the buyer. But yeah, they're just paying it out of margin. And if the gross margins are high, they can keep doing that. So,
well, Dustin, here's a crazy thought just occurred to me while you were talking. Existing home values are high right now, are they not?
Yes,
they are high. Yeah.
Existing home values higher than they keep going up. They keep inching up. They're not going down. This isn't 2008. They're going up because of a lack of inventory on the market, correct? So you just said there's some margin in there that the builders can afford to spend. Well, guess what? Mr. Homeowner, has a little extra margin in the value of my house. I bet I could probably afford to pay $20,000 to buy the points down for the guy that's going to pay for my house, right? I mean, the public needs to be aware that this is not impossible.
No, I'm saying, Matt, the thing that's holding back existing home sales is that people are locked into a 2 3/4 or 3% mortgage, and they don't want to trade that, because if they sell their house, then what are they going to do? Where are they going to go?
I mean,
right?
in my case, I'm just going to buy a smaller house, right? Because I'm older. And so there's people like me that are entering in their late 50s and early 60s that are kids are leaving the house, going off to college or whatever. Greg, you're an empty nester now. Do you need to live in the big house that you currently live in? No, not really. You could sell it and buy
every
two or
time I
three
go over to
houses if
Greg's
you want
house,
to.
there's 20 people over there, and the back and the front. Like, it's, I don't know how much. Even when Greg's out of town, there's 20 people over there.
We're, it's interesting you say that, Matt, but here's the thing is, our house is the place where all of my kids and grandkids can come back to, and it's big enough to handle them all. I move in, and honestly, my wife likes to garden, et cetera, et cetera. Now,
I understand not wanting to uproot your family history. I get that.
It's a great point, because I think there's obviously a lot of people who have a mortgage on their house, but I don't have the numbers right on hand, but there's a substantial portion of the home ownership market that don't have a mortgage or have they own their home outright, right?
Yeah, they're just paying
it's something taxes. Like over 50%, isn't it?
Yeah, I think 50% was the number I had in my mind, but I would want to double check that. But it's a large number, right? And I think the point you brought up, that was just brought up now, those are potential kind of, I'll call them discretionary sellers, right? They don't have a rate that they're trying to hold on to, and they could sell because they don't necessarily need the space. I think the problem is, especially with the older generations, they look at, okay, I can sell my 3,500 square foot house and get price X and then downsize to a condo, but I'm going to pay almost the same price for a brand new condo, and I'm not going to be left with that much equity. And so people just say, forget it. I'm just going to stick around in this spot. And I think to your point, grandkids and kids are going to come home for the holidays because we have the space, and that's just how we're going to do it. So I think that's a huge kind of stickiness in the resale market that's prevailing. So
one of the things that I saw interesting in the new home sale data, we were up month to month, February to March, 8.8%. And from last year to this year, 8.3%. Year to date, up 4.4%. The most interesting thing is every region except the South was up. And the South was down 6.6%. The South represents 2/3 of all of sales. It also represents 2/3 of all of housing starts. It's actually maybe even might be higher than that right now. So I found that was interesting to me, and maybe month to month, as Dustin, right? I mean, there's vagaries in it, but I just thought that was interesting.
The thing too that besides sort of the headline trending right, if you kind of dive into the homes for sale data, right? They have it broken down by stage of construction. If you look at particularly homes that for sale that have been completed or homes for sale that are under construction, that inventory is rising very fast right now. So that's something that I would keep an eye on. Some of it is necessary because you need that inventory because the resale inventory is so, there's just so little inventory, right? So the new side of the market is kind of filling that void. But I do wonder, with the resale side of the market is seeing inventory rise a little bit now, right? So, or actually pretty substantially, depending on what you're looking at. If you look at the existing home sales data or Altos or some of that more high frequency data. So I do wonder, when you think about housing starts, if maybe things are going to cool down a little bit, if builders are starting to put a little bit too much of that completed inventory out in the market, and we don't see home sales get a little more traction, especially with rates where they are right now. So that's kind of interesting, what I'll be kind of watching.
Dustin, we talked about kind of the different inputs, or the three legs of the stool. I talked about the ones that I live in. I think Matt and Greg does: multifamily, single family, repair and remodel. So let's look at housing starts and permits first that came out, and single family up, multifamily down, right? Talking to people today, as Matt said, it seems confusing out there. I was talking to one of the big national, or a couple big national locations, and single family steady, although one person did say in Texas a few things were easing up. Multifamily, not a lot of jobs in the pipeline are coming through. what was your read on the homes and on the permits that came out this week, permits and starts, or last week?
Year to date, single families up, I think we're around 25%, something like that, right? So it's a lot of volatility in the data, but things seem to be chugging along. And, you talk to builders too, they feel pretty good about sort of their guidance for the year. I don't think there's really kind of much change on that front. Again, the data is going to be volatile month to month, depending on weather and things like that. But the permits really kind of are the steadier read of trend. Multifamily, dropping below 300,000, on a seasonally adjusted basis for the first time was alarming, right? I suspect things will kind of bounce back a bit. A lot of that sort of weakness, there was a lot of bad weather along the coast, the east and sort of northeast. There's a lot of multifamily in that side of the market. So I do wonder if, the March data was kind of influenced by that. But certainly the multifamily side of the market, that, when you look at the number of homes under construction, right, and you look at the multifamily side, 5+ units, we have a historic amount of under construction that is now floor space coming into the market, right? It's probably going to take at least 12 months for that under construction sort of data to normalize. And to us, that just points to the fact that multifamily starts are just going to be suppressed for probably the remainder of the year, maybe into early 2024, right? So this is kind of a slow moving sort of train wreck on the multi side that we've been expecting. But obviously you see a number sub 300 seasonally adjusted, that catches people's attention. So
what would you forecast multifamily starts down year over year, 23 to 24?
Yeah. So right now we're thinking that we're going to drop about 100,000 units. So for the annual total, right, for 2024, we think we'll be down a little, like 110,000 units. So we're going from, I think it's like 470 to 480 in 2023 to like 360,000 units. So that's a big drop.
25%, right?
Yeah.
25. So in the first quarter, we were down almost 40%. So, that says that number is worse than what it's going to be than that
reality.
The balance of the year.
Good question. Just a lumber question to that then, because, I don't know a lot of lumber traders will think of this, and you actually touched on this, Dustin, in our conversation when we started this or before we started recording. Okay, so we got single family up, we got multifamily down. How do we square that with consumption of lumber between the two of them?
Yeah. Okay. So exactly. So, rough rule of thumb, right, is that, a typical single family home in the US uses about 3 times more lumber than a multifamily home, right? So, that's rough rule of thumb, but it makes sense when you think about the average single family home is probably about 2,600 square feet. A multifamily home is typically 1,000 square feet, even less, maybe more like 1,200 square feet less than a single family home. So some of it's just floor space. Some of it is multifamily also has high rise, which is more steel, concrete, that sort of thing, right? So if you just think about like from the forecast, right? So we think multifamily is going to be down 110,000 units, but we think single family in 2024 will be up by, let's call it 80 to 90,000 units. Net, it's pretty close to zero, but it's still a volume positive figure because of just how much more
it's a volume positive
figure, right? Yeah.
Well, it's going to help your plate. It'll help your plate stock. It'll help your 8 and 10-foot stud trims, which are typically not going to be used in the multifamily, which is more of a 9-foot thing. I mean, it certainly helps the yellow pine guys, right? Because there's all this cheap yellow pine floating around out there. But yeah, no, it's fascinating to hear you talk. I've never heard anyone spell it out that way, Dustin.
Great
That's actually good information.
Well, and as this as a caveat though, right? That's just in new construction. You also have to factor in repair and remodeling, and then industrial. Industrial is a small piece, and it kind of, the residential really kind of drives the. So
before we jump into the repair and remodel, I've got one thing circled here. Yeah. Mass timber. What type of offtake or what are we consuming there? Because I read the social media of everybody in mass timber, and I wanted to consume more lumber. Where is it actually at right now in the big picture of consumption?
Yeah. And I'm with you. I think it's an exciting space. I think there's potential there. I mean, just to put some numbers to it, total lumber consumption in the US and Canada combined is around, our estimate for 2023 is around 58, 59 billion board feet. Mass timber in the US and Canada right now, it's hard to measure because there's really not a lot of data, but if you're talking mass timber in, if you're talking CLT and, NLT, those kind of traditional sort of materials in sort of high-rise multifamily, you're talking hundreds of millions of board feet, and on kind of the lower end, like you're probably 200, 300, 400
Yeah, we're
million
still
board
early
feet
in the game on that. Yeah.
Now, and so it's almost a rounding error. Now, it probably will grow exponentially. So if you're talking 10, 15, 20 years out, you're talking low billions of board feet, right? But right now, it's just not moving the market.
Okay, so we know from talking to that repair and remodel, single family and multifamily, we think it's going to be a net positive with where it's lining up for single family being strong, multifamily being a little weak for lumber consumption. Now let's go into the big one that uses more. What's the percentage now repair and remodel is consuming of all of that 56 billion board feet you were talking about here or what's?
Yes. So it's a little, we think it's a little over 40% of total softwood lumber consumption, and new residential construction. So single family, multifamily, mobile homes is around 30 to 35%. So for softwood lumber, repair and remodeling is actually the bigger end use category than new construction. And it's hard to quantify. So it's more of a market research exercise than anything precise, but you can sort of back it out by, it's a little more precise to calculate the new construction side, because we know roughly the utilization per square foot of floor space. And when you kind of count everything up, there's this huge volume that's left that's unaccounted for. Some of it's industrial, but most of it is repair and remodel.
So when I talk to people in Montreal and talk to people in the industry, here's what I come up with. Everybody that's just shipping, well, let's carve southern yellow pine out for a second. Let's just talk about Canadian US species that are shipping for repair and remodel. What I hear is, as of leaving Montreal, that things seem to be steady and projected to be the same as last year. I don't know right, wrong, or indifferent. That's what I hear. Southern pine, a different story. Southern pine going to, decking and all the other attributes to a deck, the different joists and so forth, seem to be down on shipping and repair and remodeling. Where are we at on repair and remodeling? What do you project?
I think that's a good summary, Ash, because I think, in aggregate, so the way we measure this, we have our own proprietary index. It's called the Fastmarkets Repair and Remodeling Index. We call it the RRI, and it's meant to just be a measure of volume of activity. So it parses out the inflation. If you look at construction spending on improvements or the LIRA, the JCHS LIRA, they're great tools to use to measure repair and remodeling, but they're influenced by inflation. So our index is just a volume, hours of construction put in place in the repair and remodeling space. Our view right now, it's basically flat in aggregate, and which is perfectly characterized by kind of what you said. And lumber is probably trending around there too. So what is happening there is the pro side, the large contractor side of the market is actually pretty good, but it seems to be decelerating. And that's like the majority of repair and remodeling. Where we've had a lot of weakness the last couple of years is on the DIY, over the shoulder, sort of home center stuff, right? And that is where that has really dragged the market down in aggregate. It's starting to reaccelerate, though, based on our read of it and our index, kind of what underlies our index. But in aggregate, things are flat. And so I think, talking to some Western producers at Montreal too, they kind of feel like their volumes are up low single digits. But you talk to anybody in Southern Yellow Pine, they're down, especially in the treated side. So net, that kind of sort of shakes out to probably flattish trend. And we kind of feel like we're probably going to be flat for most of the year until the R&R side. We feel there's just some headwinds in the near term that are going to keep that kind of reaccelerating. So,
well, there's another thing that's going on with the home center business that isn't really widely acknowledged, but it's reality. They're kind of leaking into the pro building type thing, right? There's more contractors going to Home Depot and Lowe's now than there was 10 years ago.
Yeah.
and they're gonna keep going after more of that. Like that's a part of their business they see as a growth avenue. And so really they're kind of trying to take some of the BFS and USLBM customer base away. It's not happening massively at this point. It's more of a trickle, but what happens when it changes? I don't know. I keep an eye on that.
The only way they can grow, right? I mean,
well,
the rest of their sales are only going to grow based on GDP.
If the consumer comes in and starts wanting to do more projects around the home because they've got home equity, like what happened in 21 and 22 with the crazy stuff that we went through in lumber, then yeah. But I mean, basically Home Depot and Lowe's, they all basically told us before the year started it was going to be flat, and Dustin just said that they're flat. So I mean, they're pretty good at forecasting. But I think one of the reasons why the yellow pine thing might be down is because that decking treated type lumber isn't really being sold to the pro guy, right? That's more of that's like me and Greg decide to put in a new back porch and we just go buy the decking and stuff from them.
Ash is doing that, but he's using plastic.
We're not supposed to talk about that.
Surprised you're not using brick.
You've got an issue with like given that it's where it is. It's like you have mold.
That's true. So listening to all this, and let's think about this. So okay, we looked at single family, multifamily, net still increased slightly, home built or repair and remodel steady. And then you hear people saying, traders have told me this. I've heard it 100 times. I'm exaggerating. I've probably heard it 20 times. This is a southern. The problem with price and the reason why prices can't get off the mat or going down, it's a southern yellow pine problem. That's what everybody's saying. Is that Matt, Greg?
There's more to the story.
There's more, but that's all I hear. It's a southern yellow pine problem. But Dustin, what was our increased production U.S.? And this is an interesting stat that you threw out before we started this, and I wouldn't have believed it when you said what happened in the South.
Yeah, so just based on the WWPA data, the industry data, and we unfortunately the industry data is very lagged, right? But when you look at production through February, year to date, the West Coast, the inland, California redwood regions are up 3 to 4% through February. Canadian production, I think, is up, or shipments or production are up mid-single digits. Southern yellow pine production through February is down 8% year to date. And again, that's only through February, so we don't have a full picture really even of
Greg, I just saw your look. I thought the same thing when Dustin said that.
Yeah.
Say that again.
I think maybe Dustin's report missed a segment of the country. Like they just left out like 3 states.
Well, I mean, so there can be revisions, but it clearly, I mean, some of it is just there's clearly a disparity in production, right? So I mean, southern yellow pine production is down mid to high single digits. So I think it's about 8% through February. Well, most of the other species are positive on a shipment. Looking at shipments, I say production.
That's exactly what I would have guessed. So is it really a southern yellow pine problem?
So Ash, maybe back to your question, like, we keep saying, okay, so new home construction, single family up, multifamily down, basically kind of flattish at this level, repair and remodel flattish at this level. How can we be at the prices that we're at?
Yeah.
What are we missing? What's going on?
Maybe the answer is that yellow pine is primarily used in multifamily and not in residential and over the shoulder.
I thought
so it's leaking into the open market, whereas before it was sitting in a warehouse waiting to go to an apartment job.
Yeah. I mean, I think that's part of it, right? Because like our view on consumption, like we hammered out, right? I mean, net volume seems positive. It's probably low single digit growth in volume. We're talking year over year. And that's kind of where we think we're going to land for the end of the year. That's our current call for softwood lumber consumption. But it does seem like southern yellow pine is getting particularly hit hard, like you said, Matt, between multifamily being down big, the repair and remodeling treated side being pretty soft and maybe down. And it's just this also supply story. Like there's just this disparity in supply. Southern yellow pine is really the only supply story where you're seeing increases relative to the rest of North America, where you're seeing flat or closures. So you have supply up, demand down, and they're also facing more direct competition from Euro spruce, in the mid-Atlantic and the Gulf. So it just feels like all the forces, the negative forces, are concentrated on the South. Now, I look at it in aggregate, and at some point, it all will shake out. And, if the South is down, it's going to drag everything else down like we're seeing. It does seem to at least be part of the story that's causing so much disruption.
Well, the numbers don't work currently think about like the companies that came out of Canada and paid top dollar for all this yellow pine production over the last 3 or 4 years.
Yeah.
You think that they're making any money when they're selling 2x4 and 2x6 sub 300? No.
But West Fraser came out first quarter. They made money.
Yeah.
West Fraser made money.
Is it coming from their panel side, from the Norbord acquisition? Because it's certainly not coming from their yellow pine.
It all came from OSB. It all came from OSB.
I mean, they're not making any money on lumber in Canada. They're shutting mills down up there, right? And now they're sub 300 FOB mill on 2x4 and 2x6 yellow pine all day long from all regions, and there's no money to be made there either. So where are they making money?
Down production in BC at this point. I mean, it hasn't everything that was going to be shut down already shut down. I mean, what's left to shut down?
Right now, BC is not the problem, right? I mean, BC is like become a niche at this point. It's more like the inland. Alberta is actually a bigger stakeholder than BC is, right?
Eastern's
Ontario,
where all the
Quebec.
production came on at. And that's probably, Greg, I'm not going to steal your idea, Greg. You're saying that's probably where any curtailments will come there if they do.
Yeah. Yeah. I mean, it is fascinating because, I mean, the Western Canadian mills, just looking at the data, seem to have managed their inventory pretty well. I mean, we have, since this is a stat I threw out at Montreal Wood Convention, since 2022, we've had over 3 billion board feet of capacity closures in North America in a, roughly a 70 billion board foot market, right? Most of that's in BC, but there's been, especially more recently, the Pacific Northwest, particularly in Oregon, we've seen some closures, right? So there's been asset closures, and a lot of those have been in the Western Canada. So we kind of wonder the same. I mean, how much further down does BC need to go here? They've lost 6 billion board feet of production since 2017. 6 billion board feet. I mean, that's basically cut in half, right? So the industry's been rationalized pretty aggressively already there. I mean, it's high cost still, but going back to Matt's point, I mean, what is alarming to me when you talk about, again, sub 300 Southern Yellow Pine FOB, that is probably half the asset base in the South, maybe more, just on variable production costs is offsides. Right. I mean, the new super mills, state of the art greenfield, brownfield mills are probably still cash positive. Right. But I mean, anything that's older, undercapitalized mills, I mean, they're well underwater right now.
What
right.
kind of work, Dustin, do you do like work on, like timber costs in the South?
Yeah. So I mean, when we forecast, right, like we have a cost model, right? And it's pretty generalized. It's just an average for the production costs for the major producing regions, right? And so we pull in the timber prices that are reported out there that our team collects and from other kind of third party sources. And we use that, kind of feed it through our model, which has assumptions on recovery rates and, other non-wood costs, sort of harvest and delivery costs, things like that. And we do kind of make an assessment of like how the fiber costs are impacting production costs, right? So like that's, especially when you start to talk about the medium to long-term outlook, the production costs are crucial to understanding where prices are going. If you understand the underlying cost dynamics, like long run, you can't, have prices below production costs. People got to make money at some point, right? So like that's a crucial kind of piece of the story from a forecasting perspective.
From the mill's perspective,
everybody can lose money for a while, but nobody can lose money forever.
Exactly.
These mills really want to just get rid of all that generational wealth they developed over the last 2-3 years. So, for the first time in our careers, the mills actually made real money, and that gave them a different perspective on business. Right? You think C&D would have just shut the doors on 130 years of production if it wasn't for the fact that Seneca sold out to Sierra, and they're now right in the backyard of the biggest producer, of Western lumber that there is. They just decided, hey, we'll just take our millions and millions of profit that we made in 21 and 22 and just say goodbye. Thanks for that. Thanks for the memories, rather than fight that for another 5 or 10 years and just bleed red. So I really believe that the mills, and I heard some mills tell me this up in Montreal, that their threshold for pain is a lot shallower than it used to be. There are some other factors going on. I heard a rumor in Texas when I was down there last week that one of the major mills up there, and I won't name names, but one of the major mills is loading up their reload inventories in the United States in anticipation of higher duties. So there's some things like that going on, gamesmanship, whatnot. But I think that the big picture for sawmills, and nobody talks about this, is our input costs are up 25% on labor. Our insurance costs are up 20%. Our energy costs are up 25%. So, I mean, whether or not the log is the same or higher or lower, it still costs more for us to make lumber than it did a year or two ago.
Yeah, but like what's Hampton doing about their production? Are they changing anything?
We're not overproducing. We can't hire enough people to run 2 shifts at all of our mills anyhow. So I mean, we're just a bump in the road here. We're not, Babine and Decker. The only thing we've done is we've rebuilt Fort St. James as a stud mill. So there's, that used to be a dimension mill. Now it's a stud mill. And we're producing 240 million board feet a year of studs out of that mill, which is to us, that's the optimal size sawmill these days with these conditions.
We were talking as traders and as people that put one on the ground and distribute, we sometimes think in 2, 4, 6 week thought process. And we're also looking out and projecting through the end of the year. But let's talk about what's happening now. I think, Matt, you had some good comments when we came on. I mean, I just wrote some notes down from people I talked to this morning. Here's some quote. It's a mess. Nobody knows what to do. I'm not getting any jobs coming through a multifamily, and certain areas are starting to slow. Some of my yards are waving a white flag because they have too much lumber. All things that you hear when there's uncertainty out there right now. I look at the price of Southern pine, where it's at. I think there's a fear or an inability to speculatively put any wood on the ground anymore right now. I'm getting feedback that some of the reloads are a lot lighter than they have been in the past. So we're in my opinion, we're in the process of clearing a market right now and figuring out and trying to find where the price is going to be. And that doesn't happen by, I'm a believer in everything. The largest, the whatever hurts the most people the most generally happens to clear a market. And that's going down to lower levels. I mean, just looking at some of the stuff we bought today, if it equates back to a 375 BC mill, which is.
No, it equates back to actually to 330 on random.
BC on random. 330 plus 108. We're looking at that's a 438, 440 CME price. Where are we at right now on that?
Low of the day is 499. Last is $504, down 550.
So
Low's
mills have been taking bids since you started last week. In the East, I don't trade much Western mill production, so I don't know what they're doing. From what I hear, 16s are trading at a big discount to random right now. Am I correct in that, or am I wrong in that?
Well, you guys would know. You guys got Euro 16s. What are those going for?
Which generally trades a $30 or $40 premium. So those are things that I see when markets start to clear. Obviously, the discount, we look at print that came out last night on East, Central, and West Side 4-inch pine. Sophomoric statement on my part, but the spread between what it's actually trading at for big blocks discounts is narrowing because as you approach zero, it has to. And at some point it's going to clear. Thoughts, guys?
My thoughts on the market are that, you guys talking about buying 330 level on 2 and better. I made a lot of money last year at this time buying $330 2x4 2 and better out of Prince George and Alberta. So I don't have any fear in that. I think those are really good numbers to be a buyer at. I feel like the market is now in a position where the chain's really tight on distribution. So if you talk about the reloads being lighter, people's inventories being lower, the mills have the wood and the ports have the wood. And so if there's any disruption to the flow of material, then this strategy of just buying trucks at the very last minute and hammering everybody to death on the price is going to fail, and they're going to have to start buying some more volume and taking a little bit more inventory to withstand an upward trending market because this thing will pass, right? I mean, you see the chart of futures; it's on a 4-week downturn, a significant one. We're down over $100 in 4 weeks, and typically, Ash, in your career, and Dustin, as an economist, looking at charts all day long, you see these big steep drops, and they're usually followed by a fairly significant steep back, maybe not all the way back up to the top, but you'll get a rebound effect, right? And so I just expect that I don't mind making some cheap offers right now. I think being a buyer is probably the better space to be in than being a seller. I wouldn't want to take
and I
orders
agree,
down
Matt.
here
We've been buying the whole way down because you kind of have to, because you only buy the bottom on accident, right? And we need to buy it every day to find out where the market's at. And we actually still have decent takeaway out of our distribution facilities, right? And we can't run out of wood. So yeah, that's one of the things we look at. Did you want to jump into our marry, date, and break up segment quick? Greg left, but I've got a few things written down here.
I think I'm just going to let you handle it, and then we can say thanks to Dustin and get back to trying to figure out what next week's show is going to be all about.
My marry items this week are ones that I probably dumped a few weeks ago: 2x4 16s and 2x4 9s as they approach the prices they're approaching right now. One on the 9s because there is liquidity on them, and I have to stay with that trade. And 2x4 16s because they won't probably trade at a discount. Never say never. In my opinion, they can't trade at this discount to random lengths for very long. I'm dating 2x4 MSR because I noticed in the sell-off, MSR is still staying a little bit. The 2 embedder is moving away from it at a much rapid pace, and I do not trade it. So this is just a guess. 2x4 Southern Yellow Pine. If I just landed on the planet Earth today and looked at the charts, I would say that would be something I'd want to buy. Break up. I don't have anything I'm really breaking up with. I do still think that CME is still carrying a good premium, so I would look at hedging stuff, even though people don't like hedging when they're this low. There are some items that you can look at. Greg mentioned it last week. 2x4 16s, if you can buy at the price we talked about and sell the board against it, there's some good potential pricing in there. That was my thought, Matt.
You got anything you want to dump?
I don't. What do you got?
I do. An observation. So like yellow pine wides have been relatively cheap all year, and West Coast hemp fir and Doug fir dry wides rallied from, say, winter lows of low 300s to almost 500 mil here over the last 4 or 5 months. I would say I'm getting a lot of offers from Western mills to sell 2x8 and 2x10 and 2x12, and to me, it's not really a dump situation because those things are always, have a value to them. But I wouldn't be paying today's prices for those items. Like I'd much rather negotiate with a sawmill on some really cheap 2x4 right now that they've already decided that we're going to go find the market on. But the 2x8, 2x10, 2x12 markets still haven't gone through that process yet. So I'd be cautious on the hemp fir and the Doug.
Good point. Hey, Dustin, let's put a little pitch in for your company here. Look at some of these. You let me take a look at your repair and remodeling index. You've got a lot of good proprietary data that people can get. And on X today, somebody put out, how do I look at OSB prices, right? So first of all, people in the industry are very familiar with random lengths, but people that are in this audience and listen and want to look at pricing data and realize that Fastmarkets and Rishi has a lot more than just pricing on certain things. You provide a lot of different services. Maybe you could talk about that for a second.
Yeah, no, thanks, Ash. Yeah, so certainly, I won't belabor the random length side. I think most people in the market are pretty familiar with that editorial service. I work on what we call our analytics side, which is sort of everything else that's not pricing and editorial, hence sort of the business economist gig. And we do a lot of kind of market research, right? So we collect sort of industry data, whether it's, production shipment data, that comes from the WWPA stats can. We collect macroeconomic data, and that kind of builds the historical data sets and the proprietary sort of estimates of consumption and sort of the end use market sort of research we do. And then also kind of sets up to launch our forecasts that we do for softwood lumber, structural panels, particle board, MDF. And so we have, what we call our monthly commentaries, lumber and structural panel and non-structural panel commentaries. So I'm the lead author of our lumber commentary, but my colleague Jennifer does structural panels. My colleague Emerson does non-structural. So we have all these different services that you can, if you want a short-term forecast, we offer services there. If you're thinking more long-term, you're thinking like CapEx or long-term trends in the industry, we do 5 and 15-year forecasts, demand, supply, prices, kind of all the bread and butter stuff that if you're just thinking about the industry, we really kind of dive in a deep way on those markets. So
do you ever make like personal predictions?
You mean like just
your personal opinion about the lumber market going over the next, say, third and fourth quarter?
I'll give you like our forecast, right? I mean, and
Sure.
Which to be honest, like my opinion is influenced by the analysis I do, right? So I'm one of those people. I generally, most of the time, sometimes I do have to step back a little bit and I do question it, but most of the time, I believe like our outlook. Like I'm saying, look, this is my best analysis. On the demand supply side, this is where we think prices are going to go. I mean, despite the kind of the crazy dislocation in the market we're seeing right now from a pricing perspective, certainly the next couple months feels like it could be rough. We feel that the direction on prices is up and to the right. And it's because we feel that demand is going to continue to trend up. Despite, again, maybe Southern Yellow Pine getting the brunt of the kind of the weakness here and, again, causing this craziness in the market. But demand points up. Once repair and remodeling reaccelerates, that's the second kind of boost of demand we're going to get here. And then the supply side, we're seeing capacity cuts. So, like, demand up, supply flat to down, industry operating rates, which are low right now, are going to rise. That generally means sort of tighter market conditions and prices going up. So, I mean, I think you could see, Western SPF 2x4, especially once you start talking out to 2025, it's going to be more, low 500s on Western SPF. But in the next 6 months, it's going to be.
And as an economist, Dustin,
so,
I mean, just the work that I've looked at, maybe this market's pretty efficient at getting supply and demand in check pretty quickly.
Yeah.
And it's generally pretty tight. That one stick extra or one stick less that's being produced, it's amazing how this industry and economics 101 finds that sweet spot.
That's what I love about lumber. I mean, I've covered, I've worked as a business economist in the forest products industry for almost 10 years now. I started on the pulp and paper side, and those kind of, those are much more concentrated markets, more complex, in terms of like horizontal and vertical integration. So there's a little bit more pricing power and more contracts. So it's, the prices in the spot market tend to be stickier. Dimensional lumber and softwood lumber, I mean, it's just, you're right. It's like bread and butter, Econ 101 stuff, which is awesome from an analytical perspective. It's just like you can use those basic principles and the market will clear quickly. I mean, just this Southern Yellow Pine example, $200 discounts on SYP 2x4, on a delivered basis, like relative to SPF, like, I mean, it could be sustained, for maybe a month or two, but like, that's going to get gobbled up. Like there's going to be substitution. There's going to be people buying kind of the value in the market there. And those spreads do normalize. And I think from a forecasting and analytical perspective, it makes it a lot more intuitive and fun to kind of to analyze the market. So I love lumber.
Lumber's like the wild, wild west, isn't it?
It is. It's
where's the sheriff?
And the people are more. I started on the pulp side, and and Ash, you know this, but pulp is a lot more sort of buttoned up, really kind of, and wood products couldn't be more opposite, right? It's
so what you're saying is pulp and paper is like the college professors, and the lumber business is like the frat members.
I mean, something like that. Yeah, I mean, you could use that analogy. A little more Animal House rather than the faculty. Something like that.
That's awesome, guys. I appreciate it. We're at looks like we put in 45 good minutes, and I think anybody listening to this is gonna really longer term see a more positive outlook for our industry and the pricing forecast going forward. And make sure you reach out to Dustin. Dustin, what's the best way for people to reach out to to Reese Random Lengths in Fastmarkets?
Yeah, you can reach out to me directly. My email, it's djalbert@fastmarkets.com. So, feel free to reach out to me directly. I'm also on Twitter, 2by4caster. If you follow me there, you can always hit me up with a direct
just so everybody knows, his last name is Jalbert for the email.
Yep. Yeah. Jalbert.
All right, guys. Thank you so much for taking the time today, and we're looking forward to getting this out and educating people.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.